The world of fintech has been a rapidly expanding industry with growth fueled by innovation. One element that has contributed to the remarkable success of the modern financial technology industry is the focus on increased accessibility. The preferences of the millennial demographic have influenced fintech firms to tailor their products in a manner that reflects simplicity, user-friendliness, and transparency. And one of the most successful firms in tapping into this dynamic has been Robinhood. A friendly, consumer-facing app is a key trait that many successful fintech firms have created. Companies like Robinhood have developed products that have caused significant disruption for various industries whose products now are considered to be dated and inefficient. One segment of the finance industry that has seen a new wave of fintech disruption is the investment industry. At the forefront of the modernization of investments is Robinhood, a firm that offers anyone with access to participate in the financial markets regardless of their personal wealth. Robinhood is a notable example of a fintech with the mission of modernizing a historically traditional stodgy industry, and the success seen by the firm serves as a testimonial to the evolving consumer and business demands for unique financial technology. Robinhood was founded in 2013 by two Stanford graduates, Baiju Bhatt and Vlad Teve. These two roommates, while attending Stanford University, parted ways after graduation and both worked in the New York City finance industry. After gaining experience in the world of investments, they found themselves reuniting in Menlo Park, California to build Robinhood. The mission they aimed to achieve was to create a platform that kicked down the barriers to the financial markets and allowed anyone access to participate in these financial markets. The name Robinhood was derived from the fairy tale, as the purpose of the newly founded firm was to provide access to financial markets for anyone and everyone, not just the wealthy. After securing various rounds of venture funding, Robinhood was officially launched, and the success of the firm has continued to explode since its inception. The firm has achieved its goal of opening up the investment world to millions of young adults. During the first few years following the launch of Robinhood in 2013, it became clear that the specific consumer market that was finding the most value in their products was the millennial demographic. By 2015, over 80% of Robinhood's users were millennials, with an average age of 26 years old. This confirmed the original belief that the founders had, that it isn't that young people don't have an interest in participating in the financial markets, but rather they didn't have the wealth to gain access through the traditional investment channels. The initial product offered by Robinhood was their core platform for trading stocks and exchange-traded funds. In order to differentiate their product, Robinhood offered this service without commission fees payable by the users. In other words, $0 fees. The business was successful in raising substantial amounts of venture capital as the subscriber base grew. Robinhood derived revenue by means of payments for order flow rather than charging an investment commission. The payment for order flow created a revenue stream that allows Robinhood to collect payment in the form of rebates from market makers and trading venues. This business model was a radical change from the old method of collecting fees for brokerage services. The results have been amazing, with growth exploding during the 2020 coronavirus pandemic. As the company grew, it began to refine the existing offerings and broaden the platform's capabilities in order to expand the consumer base and add new streams of revenue. In 2016, Robinhood launched a subscription model called Robinhood Gold. Initially, Gold was sold at the low price of $10 per month in order to provide its users with the option for an affordable upgrade to the existing capabilities of the full Robinhood model. The Gold subscription allowed users access to professional research reports, the opportunity to trade on margin, and the ability to make instant deposits from their trading account. Today, Robinhood Gold is offered at an even lower price of $5 a month. Robinhood has thrived off of its ability to identify consumer demands and tailor their firm's offerings to meet those demands. The launch of Gold was a success, and their cash management services provides users with the option to allow Robinhood to manage uninvested funds that are kept in the user's brokerage account. The company's cash management services offer a yield higher than most banks. In addition, up to $1.25 million of managed funds in a user's accounts is eligible to be FDIC insured. The mission of this service was to integrate a use for Robinhood even when users were not actively trading on the Robinhood platform. The most recent product offering from Robinhood is the adaptation of their trading platform to be usable for the exchange of cryptocurrency. The market for buying and selling cryptocurrency has exploded in recent years. This provided an opportunity to engage with a new financial market that has maintained a relatively unserved nature by most of the traditional brokerage firms. The lack of understanding and history behind the market for cryptocurrencies has resulted in the hesitancy of many legacy firms from engaging with this new market. However, over time, cryptos have become increasingly popular among younger generations of investors, and the spark in interest from this key demographic presented a valuable new opportunity for Robinhood to pursue, a path to beyond their primary use of trading stocks and ETFs. Robinhood derives revenues from deal flow, membership fees, margin interest income, and debit cards. And crypto now offers future revenue opportunities. In order to alleviate the remaining uncertainties regarding the exchange of cryptocurrency, Robinhood has included a few features on their new platform to protect their users. In order to shield users from drastic price changes, Robinhood adjusts market orders to limit orders up to 1% for buy and 5% for sells. This provides assurance that orders will not be executed in the case that given the cryptocurrency price shifts radically above or below 5%, it turns into a limit order. This feature sets Robinhood apart and is likely to make them one of the leading cryptocurrency investing firms for young investors, expanding future revenue opportunities for the firm. Robinhood has continued to illustrate their ability to think like a consumer and act in a manner that provides users with their evolving demands. The company has grown to a recent valuation of over $8 billion since its inception, and forecasted growth numbers remain strong. During the 2020 COVID-19 pandemic, massive numbers of activity of millennials and Generation Z were seen in the financial markets. And Robinhood was the key platform that these investors used. However, Robinhood suffered a loss in consumer satisfaction as their platform experienced an outage that lasted the entire trading day on March 2, 2020, which was one of the most extremely active days in the history of U.S. financial markets. The damage that resulted from Robinhood's untimely outage was vast, as users and the large media outlets spoke of the firm's failure to manage the outage quickly as the fall of a previous fintech star. However, the tone of the outraged users was short-lived and did not result in the anticipated damage, as user growth was unaffected in the long run. Throughout the COVID-19 pandemic, Robinhood saw record trading volume and deposit activity. In fact, the firm has proven to maintain over 50% of the market share for new brokerage accounts in 2020, which is greater than the share of all the incumbent legacy brokerage firms combined. In the first half of 2020 alone, over 3 million new accounts were opened with Robinhood. As is true in all new industries, with great success comes great responsibility. Robinhood bears the weight of ethical responsibilities applicable not only to a new fintech, but to any firm. For Robinhood, there are significant ethical obligations to both their consumers as well as regulators that must be met in order for the firm to maintain smooth operations. To begin, Robinhood is responsible for the proper storage and protection of sensitive consumer data. Each time a new user's account is created, a collection of highly sensitive personal and financial information is provided to the firm because this information is necessary for the services offered by Robinhood. Maintaining a strong and consistently reliable information system for storing this data is at the forefront of Robinhood's obligation to their users. This responsibility becomes even more important with the growth of cryptocurrencies. An ethical issue was encountered by Robinhood in 2020 that included the untimely suicide of a 20-year-old man who had created an account with the firm during the COVID-19 pandemic. Tragically, the young man took his own life after excessively trading on the company's app, which caused him to believe that he had incurred over $700,000 in losses from trading options. Following the tragedy, it was revealed that the user had in fact not incurred losses of that magnitude, but rather the Robinhood account app had not yet settled to include the stock's underlying option positions. Essentially, the young man took his life as the result of a misunderstanding driven by the delay in a true account balance being visible on his smartphone app. There is controversy surrounding this situation regarding whether or not Robinhood was truly at fault. On one side, it can be argued that significant safeguards need to be in order to protect users from rash market behavior that could have deterred the event had they been implemented into the app to provide real-time information. On the other side of the argument, it could be claimed that the user assumes the risks associated with their own market choices, and therefore Robinhood should not be held liable for the behavior of their younger users. The greatest underlying ethical dilemma for Robinhood relates to whether or not total accessibility for all who participate in the financial market poses a greater threat than it does a benefit. Since its inception, Robinhood has long stood as a rising star in the fintech industry. The firm's ability to provide easy access to the markets using a clear and simple platform continues to draw in young investors. Although it is almost certain that legacy brokerage firms will follow suit and attempt to mimic Robinhood's commission-free trading business model, Robinhood, like other fintechs, likely will remain a favorite of younger financial consumers. The existing Robinhood user base is unlikely to transition off of the platform unless some additional incentive is provided, which legacy brokerage firms are unlikely to offer. The firm's ability to maneuver unfortunate events such as the outage in March of 2020 and the highly publicized suicide of a young user further illustrates that the firm has gained the trust of its users. The popularity that Robinhood has achieved up to the present suggests that the firm will likely continue to grow stronger in coming years and continue to thrive as a leader in fintech, especially as the cryptocurrencies grow in importance. Robinhood is a great example of a successful U.S. fintech unicorn.